welcome to the deep dive. Today we're going to be exploring this really fascinating financial advice book.
Oh, yeah.
Yeah, it's been kind of making the rounds online a little bit,
Okay.
and the title is Shortcuts to Wealth.
Okay.
And it's written by someone who calls themselves Silicon Valley Hermit.
Interesting. I like that.
Yeah, right. So we're going to kind of dig into some excerpts from this book
All right.
and see what kind of practical advice maybe we can pull out.
Yeah, I'm always looking for those shortcuts.
Yeah, right.
Are we all?
Yeah, for sure. So one of the things I found really interesting right off the bat is that this book, it really challenges
Okay.
some of the common ideas that we have about how to build wealth.
Interesting.
Yeah, so like one of the big ones it kind of tackles right away
Yeah.
is this idea that if you just work hard enough, you're guaranteed to get rich.
Ah, okay.
Yeah. And, it uses a pretty interesting example to illustrate this point.
Oh, really?
Yeah. So it talks about Mike Tyson.
Oh, the boxer?
Exactly. Mike Tyson, the boxer.
Okay.
And he, over his career, he earned over $300 million.
Wow. That's a lot of money.
It is a ton of money.
Right.
But he actually ended up filing for bankruptcy.
Oh, wow. Okay, so that kind of goes against that whole, just work hard.
Exactly.
And the money will come.
Right. So it's like even if you earn a massive amount of money,
Right.
that doesn't automatically equal lasting wealth.
So there's got to be more to it.
Yeah, there's got to be something else going on.
Okay.
And this is where the book introduces this concept of opportunity cost.
Opportunity costs.
Yeah. Have you heard of this before?
Maybe. But remind me.
Yeah. So basically, every time you spend money on something,
Okay.
you're giving up the opportunity to invest that money
Ah, okay.
and potentially grow it over time.
Okay, so it's kind of like every dollar you spend is a dollar you didn't invest.
Exactly.
Got it.
Yeah, so it's not just about how much money you make.
Right.
It's also about how you choose to use that money.
Okay.
And the book really kind of brings this concept to life with some pretty eye-opening examples.
I like examples. I'm an examples person.
Yeah, me too.
Yeah.
It really helps to make it more concrete.
Yeah. Yeah.
So one example that really jumped out at me
Okay.
was the book claims that spending like $50,000 on an engagement ring.
Okay. So a big purchase.
Yeah, a big purchase.
Yeah.
Could actually cost you over $2 million in the long run.
Whoa, wait, hold on. How's that even possible? How can a ring cost that much?
Right. Sounds kind of crazy, all right? But the way the author explains it is that they're looking at the potential returns you could earn
Okay.
if you invested that money instead.
Right.
So instead of buying the ring, you put that $50,000 into, let's say, the S&P 500.
Okay. The S&P 500. So that's like what? A bunch of stocks?
Yeah, it's like a collection of stocks that represents the overall U.S. stock market.
Okay. Got it.
And historically, the S&P 500 has delivered an average annual return of about 10%. Yeah, so imagine taking that $50,000, putting it into the S&P 500,
Okay.
and it grows at an average rate of 10% per year over, let's say, 40 years.
40 years. Okay.
You could end up with over $2 million.
Oh, wow. Okay. So that's the power of compound interest.
Exactly. Compound interest working in your favor.
Yeah, I've heard of that, but I never really
powerful.
like that.
It really is, yeah. But in this case, because you spent the money on the ring,
Right.
you miss out on that potential growth.
Ah, okay.
Yeah. So it's almost like there's a hidden cost
Right.
to every spending decision you make.
It's like a trade-off.
Exactly.
Okay. That makes sense.
Yeah, and it's not just about these like big purchases.
Okay.
The book also talks about how these small recurring expenses,
Like what?
like, your daily coffee.
Oh, my coffee.
Yeah, right? Or that subscription you keep forgetting to cancel.
Oh, yeah.
These things can also have a huge impact over time.
Okay.
So they actually calculate.
Let me guess. They put it into the S&P 500.
Kind of, yeah. So they say that like a daily $30 Starbucks habit.
$30? Okay, that's a lot of lattes.
It is a lot of lattes.
Yeah.
But they say that over 40 years, that could cost you almost $5 million.
$5 million. Oh my gosh. That's a scary thought.
It's kind of mind-blowing, right?
Yeah, it really makes you think twice about those daily indulgences.
Yeah, it really does.
Like, is this latte really worth $5 million?
It's a good question to ask yourself.
Yeah, definitely food for thought.
It's like the author saying that every time you spend money, there's this kind of like hidden price tag.
Yeah, right.
It's the wealth you're potentially giving up.
The opportunity cost.
Exactly, the opportunity cost.
Okay, got it.
It's definitely making me more mindful of my own spending habits.
Yeah, me too. Me too.
So So we've seen how, our spending choices can really impact our wealth potential.
Right.
But then the question becomes, okay, so where should we be putting our money instead?
Right. That's the big question.
And Shortcuts to Wealth has a pretty clear answer. Index funds.
Index funds. Okay.
Yeah, the author's really passionate about index funds,
Really?
especially the S&P 500 and the NASDAQ 100.
Okay. So like those broad market index funds.
Yeah, they actually call them a secret weapon for building wealth.
The secret weapon, huh? Okay. I'm intrigued.
And to support this claim, they actually delve into the long-term performance of the S&P 500.
Yeah. Okay.
And they point out that over the past 67 years, it's delivered an average annual return of 11%.
11%. Wow, that's pretty impressive.
It's pretty remarkable, especially considering how long of a time period that is.
Yeah, for sure. That's pretty consistent.
Yeah, and to really illustrate this point,
Okay.
they give this really compelling example.
I love a good example.
Yeah, so they say, imagine you had invested just $10,000 in the S&P 500 back in 1924.
1924. Wow.
It's a long time ago.
It is?
They say you would be sitting on a cool $78 million today.
78 million. Are you serious?
Yeah, from just $10,000.
Okay, that's the magic of compound growth.
Exactly.
That's incredible.
Yeah, so it really shows how time can work in your favor when it comes to investing.
Right. The earlier you start, the better.
Exactly.
Okay, so index funds, got it. But what about picking individual stocks?
Yeah, that's where the author makes a pretty interesting comparison.
Okay.
So they compare the performance of the S&P 500
Okay.
to the average returns of individual stock pickers.
Right.
And it turns out that, on average, individual stock pickers
Yeah.
achieve a much lower return.
Really? So you're better off just investing in the whole market.
That seems to be the author's argument, yeah.
Interesting.
And they don't just stop there.
Oh.
They also talk about professionally managed funds.
Oh, okay. So that's where you pay someone to pick stocks for you.
Exactly. You're paying these experts
Yeah.
to try and beat the market.
Okay.
But even those professionally managed funds
Yeah.
often fail to outperform the market over the long term.
So the experts don't always know best.
Not necessarily.
Hmm.
In fact, they cite a statistic that 90%
90%?
of these funds underperform the S&P 500.
Whoa, that's a huge number.
It's pretty shocking, right?
Yeah, and this is within 30 years.
So basically, trying to beat the market is a losing game for most people.
That's what the author seems to be suggesting.
So what's the alternative? Just put your money in an index fund and forget about it.
It's a simpler approach, a more passive approach.
Okay.
But based on the data they present, it seems to be a pretty effective one.
Right.
It's about letting compound growth do its work over time.
Makes sense.
So we've talked about spending, we've talked about investing.
Yeah.
But what about debt?
Debt. Everyone's favorite topic.
Yeah, right?
Yeah.
Nobody really likes to talk about debt.
It's a necessary evil sometimes.
Yeah.
Okay, so what does this book say about debt?
Well, this is where it gets really interesting.
Oh.
Because Shortcuts to Wealth actually challenges another piece of conventional wisdom.
Uh-oh. What is it? Paying off your mortgage early.
Wait, you're telling me I shouldn't pay off my mortgage early?
Well, the author argues that it might not always be the best financial move.
Okay, I'm listening. I'm very curious to hear this.
So the reasoning gets a little technical.
All right.
But essentially, they claim that when you factor in things like inflation
Okay.
and potential tax deductions,
Yeah.
the real cost of your mortgage can be much lower than what you see on paper.
Okay, so it's not just about the interest rate.
It is-
There are other factors to consider.
Yeah, and in some cases, they even suggest that the real cost of a mortgage could be negative.
Negative.
Yeah.
You're telling me I could make money by having a mortgage.
That's what the author is suggesting.
Okay, I've never thought about it like that.
It's a pretty unconventional way of looking at debt.
It is. It is.
So instead of rushing to pay down your mortgage,
Okay.
they actually propose a different approach.
All right, on all ears.
They encourage readers to consider investing that extra money
Okay.
in assets with potentially higher returns.
Like index funds.
Exactly, like those index funds we were just talking about.
Okay, so instead of paying down the mortgage, put the money in the market.
That's the basic idea.
Interesting.
The author even shares their personal experience with refinancing.
Refinancing.
Yeah, so basically, replacing your existing mortgage with a new one,
Okay.
often with a lower interest rate.
Right.
And this can free up some cash flow
Ah.
that you could then use to invest.
So you're using debt to your advantage.
Exactly.
Okay, that's pretty bold strategy.
It is.
But I can see how it could potentially work out.
Yeah, and they even mention using home equity.
Home equity.
Yeah, so that's the portion of your home that you actually own
Okay.
to further invest.
So you're basically using your house as leverage.
Yeah, it's about understanding how these different financial tools can work together.
Okay. So it's not just about being debt-free.
Right.
It's about managing debt strategically.
Exactly.
Okay, that's a really different way of thinking about it.
Yeah, it's definitely challenging some of the conventional wisdom around debt.
For sure. I'm really interested to see what else this book has to say.
Yeah, there's a lot more to unpack.
All right, let's keep going.
Yeah, let's dive in.
Okay.
So we're seeing some unconventional thinking here.
Yeah, definitely.
It's not just about, like, pinching pennies.
Right.
It's about using these financial tools in a way that a lot of us maybe haven't considered before.
Exactly. And that kind of brings us to another really important point that the book makes,
Okay.
which is the power of time.
Time. Okay.
Yeah, time in the market.
All right.
And to illustrate this, they introduced this concept called the cumulative investment multiplier.
The cumulative investment multiplier.
Yeah, it might sound kind of complicated,
A little bit.
but it's actually a pretty simple idea.
Okay.
It basically just shows how much your wealth can grow based on, how much you invest each year, the rate of return you're earning,
Yeah.
and most importantly, how long you stay invested.
So the longer you're invested, the more potential for growth.
Exactly. It's all about time.
Okay.
And they give this really compelling example.
Okay, let's hear it.
So they say if you invest $10,000 every year for 50 years
10,000. Okay.
and you earn an average return of 10%,
Okay.
you'd end up with, get this, $12.8 million.
Wow. Okay, so that's a pretty significant return
It is, right.
just from consistent investing over time.
That's the beauty of compound growth.
Compound growth, it's a powerful thing.
It really is.
Yeah, but what really struck me
Okay.
was the comparison they made
Okay.
to starting to invest just 5 years later.
Oh, okay.
And they say that if you start investing just 5 years later,
Yeah.
you end up with significantly less.
Really? Even just 5 years makes that much of a difference.
A huge difference.
Wow. Okay.
Yeah, and so it really, like, highlights how those early years of investing
Okay.
are so crucial.
Yeah. So the earlier you start, the better.
Absolutely. Time is your greatest ally when it comes to investing.
Time in the market, not timing the market.
Exactly. That's the key takeaway.
Okay. Got it.
Don't try to, like, predict the perfect moment to buy or sell.
Right.
Just invest consistently over the long term.
Makes sense.
Now, here's something I found kind of surprising.
Oh.
The book, it actually spends quite a bit of time explaining the U.S. financial system.
The U.S. financial system.
Yeah, which I thought was kind of unexpected.
Yeah. I mean, this book is aimed at a Chinese audience, right?
Exactly.
So why would they care about the U.S. financial system?
Well, that's a good question, and the author addresses this directly.
Okay.
They argue that understanding the U.S. financial system
Okay.
can actually provide valuable insights for investors anywhere in the world.
Okay.
So it's not just about understanding American finance.
Right.
It's about understanding these global forces
Okay.
that shape markets and investment opportunities.
So it's like a bigger picture perspective.
Right.
Okay, that's interesting.
So they delve into the role of the Federal Reserve,
The Fed.
which is
Yeah.
the central bank of the United States,
Yeah.
and they explain how the Fed sets interest rates.
Which, can have a big impact on a lot of things.
Right. It affects mortgages, stock prices, the whole economy.
Pretty much everything.
Yeah.
Okay.
They also explain why the U.S. government borrows money.
Oh, yeah, I've always wondered about that.
Right. And they make the point that it's not always a bad thing.
Okay, so why does the government borrow money?
Well, they say it's about investing in things like infrastructure, education,
Yeah.
things that can benefit the economy in the long run.
So it's not just about spending recklessly.
Exactly. It's about investing in the future.
Okay, that makes sense.
They also give a kind of a glimpse into how the U.S. banking industry works
Okay.
and how banks make money.
Yeah, I've always been a little curious about that.
Right. So it might seem like a lot of technical details.
Yeah.
But the author does a really good job of connecting these concepts
Okay.
back to, like, practical personal finance decisions.
Oh, okay, so it's not just theory.
Right. It's about making this information relevant to our everyday lives.
I like that.
Yeah. So, for example, understanding how the Fed manages inflation
Oh, okay.
can help you decide when to invest in bonds versus stocks.
Ah, okay, so it's about making informed decisions.
Exactly.
Okay, that's really helpful.
Yeah. So we've covered a lot of ground so far.
We have, from debunking myths to diving into the U.S. financial system.
It's been quite a journey.
It really has.
What's been the the most surprising or maybe actionable insight for you so far?
That's a good question. I think for me, it's really the emphasis on opportunity cost
Opportunity cost.
and the cumulative impact of those small
Some
expenses.
things we often overlook.
Exactly. Like it's so easy to just, buy a coffee every day or
Yeah.
subscribe to another streaming service.
Right.
But the book really drives home how those small choices can add up to big losses over time.
It's like death by 1,000 lattes.
Exactly. And it's not just lattes, it's everything.
It's all those little things.
It all adds up.
Yeah, it really makes you think twice about where your money's going.
Yeah, it's a good reminder to be more mindful.
Absolutely. What about you? What resonated with you?
I think for me, it was the book's perspective on debt.
Debt. Okay.
Yeah, like I've always been taught to pay off debt as quickly as possible.
Yeah, that's the conventional wisdom.
Right, but the author makes a pretty compelling case for using debt strategically,
Okay.
especially when it comes to mortgages and investing.
So it's not always about being debt-free.
Exactly. It's about understanding how to use debt to your advantage.
Okay, I can see that.
Yeah, it's definitely a different way of thinking about it.
For sure.
Now, before we wrap things up,
Okay.
I wanted to touch on another interesting point the book makes.
Okay.
So it briefly compares the S&P 500,
To the performance of the CSI 300 index.
the CSI 300 index.
Yeah, which tracks the 300 largest companies
Okay.
listed on the stock exchanges in Shanghai and Shenzhen, China.
Oh, okay. So it's like the Chinese equivalent of the S&P 500.
Exactly.
Okay, interesting.
And they highlight that the U.S. stock market
Yeah.
has historically delivered higher returns.
Higher returns than the Chinese market.
Yeah,
Wow, that's surprising.
it is, especially considering how much the Chinese economy has grown in recent decades.
Right, you'd think their stock market would be doing really well.
You would think so, but as the author points out,
Yeah,
past performance isn't necessarily indicative of future results.
that's true.
And it's always important to diversify your investments
Diversification, yeah, that's key.
across different asset classes and geographies.
Don't put all your eggs in one basket.
Exactly.
Okay, so even though the U.S. stock market has done well in the past,
Right.
it's still important to spread your investments around.
Absolutely. You never know what the future holds.
Right, right.
So we've explored a wide range of topics from shortcuts to wealth.
We have. It's been a very interesting discussion.
Yeah, we've uncovered some unconventional wisdom, challenged some conventional thinking,
Definitely.
and hopefully given our listeners some food for thought.
Yeah, I think it's really important to question assumptions
Absolutely.
and to explore different perspectives when it comes to finance.
And ultimately, that's what this deep dive has been all about.
Right. It's about encouraging our listeners to think critically and strategically.
About their financial decisions, both big and small.
Exactly.
To explore new possibilities, to challenge those assumptions,
Yeah.
and to seek out those paths that lead to a more secure and prosperous financial future.
Well said.
You know, it's really interesting how this book,
Yeah.
written for a Chinese audience,
Right.
it spends so much time talking about the U.S. financial system.
Yeah, it really highlights how interconnected global finance is these days. It's like what happens in the U.S. economy.
Right.
It affects everyone around the world.
Exactly, yeah. And it's a reminder that, these financial principles,
Right.
they often transcend borders.
Yeah, what might seem relevant only to U.S. investors can
Yeah.
actually be valuable for anyone, anywhere in the world who's looking to build wealth.
And they give some good examples in the book.
Oh, yeah. Like what?
Well, like understanding how interest rates work.
Oh, okay, yeah.
That can help you make smarter decisions about, saving, borrowing, investing.
Right. Regardless of where you live.
Exactly.
Interest rates are going to affect you one way or another.
It's all connected.
It is. It is. So even though the book uses a lot of U.S. specific examples,
Right.
the underlying principles are really universal.
I think so, yeah.
It's about recognizing those patterns and then applying them to your own situation.
Right, figuring out how they fit into your own financial life.
Exactly.
Yeah.
So as we wrap up our deep dive into shortcuts to wealth, what really stood out to you?
Honestly, I think it's the combination of practical advice
Okay.
and these really thought-provoking perspectives.
Yeah.
It doesn't just tell you what to do.
Right.
It helps you understand why you should do it.
Yeah, I like that. It's not just about blindly following rules.
Exactly.
It's about, understanding the reasoning behind it.
And I really appreciate that the author is willing to Like,
Yeah.
challenge conventional wisdom.
Right, because sometimes the conventional wisdom isn't always the best advice.
Exactly. Yeah. And
Yeah.
it encourages us to think critically.
Right, question those assumptions.
Yeah. Do our own research, seek out different perspectives.
Which is so important when it comes to finance.
Absolutely.
Because there's so much information out there.
Right.
And it's not always easy to know what to trust.
So for anyone listening who's feeling inspired
Yeah.
to maybe explore some of these shortcuts to wealth,
Right.
what advice would you give them? Where should they start?
I think the first step is to really sit down and think about, what are your financial goals?
Yeah.
What are you working towards? What's important to you?
Right. Figure out your why.
Exactly. And once you have a clear vision of what you want,
Yeah.
then you can start exploring the strategies and principles
Okay.
that will help you get there.
And it's okay to question things along the way.
Oh, yeah, absolutely.
Don't be afraid to challenge the status quo.
Right. Do your research, get different perspectives.
Yeah. And remember, there's no one-size-fits-all approach.
Exactly. What works for one person might not work for another.
So it's really about finding what works best for you
It's about finding your own path.
and remembering that it's a journey.
It is. It's not a destination.
It's not something you achieve overnight.
It's about making those consistent, informed decisions over time.
And enjoying the process, right?
Exactly. It's not supposed to be a chore.
Yeah.
It should be something that you're excited about.
Right. Something that motivates you to keep learning and growing.
So as we wrap up this deep dive into shortcuts to wealth,
Yeah.
we hope you've gained some valuable insights.
Discover maybe a few shortcuts of your own.
And most importantly, that you feel empowered
Yeah.
to take control of your financial future.
Because ultimately that's what it's all about.
It is. It's about creating a brighter financial future for yourself.
And remember, the journey to financial well-being
Yeah.
is an ongoing exploration.
It is.
So keep learning, keep growing,
Keep asking questions.
and keep seeking out those paths
Yeah.
that lead to a brighter financial future.
Absolutely.